Swimming like a shark in a shrimp tank. Big fish, small pond in the shrimp tank.
Welcome back to another episode of the Shrimp Tank, coming to you virtually from Seattle and the entire Pacific Northwest. Listen, if you want to learn how to start, grow, or run a successful business, this right here is the podcast for you. This is where we say street smarts and book smarts collide. Hello again, everyone. I'm Dan Whedon, and my co-host today is Craig Swanson. Our guest is Kevin Campbell from Peaks Financial. For over a decade, Kevin has leveraged his wealth management, retirement, tax and legacy planning, and education funding savvy into helping clients tackle complex money issues and empowering them with financial literacy. His ability to literally quiet the noise and balance the polarization often heard in money circles have made him a frequent commentator for media outlets. Kevin founded the firm in 2009 after exiting a successful career in technology. He and his wife, Christine, enjoy spending time with family and exploring the beautiful Pacific Northwest, including golfing. We'll talk about that. And I need to say this, Kevin Campbell is an investment advisor representative of and advisory services are offered through USA Financial Securities Corporation, a registered investment advisor. Peaks Financial is not affiliated with USA Financial Securities. Whew, that's a mouthful. Welcome, Kevin. We'll be with you in just a minute. Everyone, you can find us wherever you get our podcasts, iHeartRadio, Apple Podcasts, Google Podcasts, Spotify, SoundCloud, Stitcher, and YouTube. We are ubiquitous. We come to you from about a dozen other cities, including the mothership in Atlanta, Boston, Boca Raton, Charleston, Dallas, Columbus, Knoxville. We're all over the place. We're ubiquitous. Now, listen, before we bring on Kevin, hello, Craig. How are you?
Hello, Dan. I am doing great. Welcome.
You know, the weather, people who don't live necessarily in the Puget Sound area don't know that May had the most rain, I think, for however long they've been keeping stats. It was a lot of rain. I walk our dog Bella, try to do it every day. She's a bit of a diva and she does not like the rain. So we like to walk on good days. But you know, Craig, you may know I do a little risk management in my spare time, and I have to do some risk mitigation with Bella, the dog. The reason is Bella, the dog, as a diva, barks furiously and, in her mind, ferociously at other dogs, rabbits, squirrels, the elderly lady using a walker, mothers with babies, and if she believes there's a dog living in a house, the house where the dog purportedly lives. And so what I've had to do, and it happened today, I took Bella for a walk before the show, and it happened today. I had to make 3 different U-turns because I saw other people and dogs, especially dogs, on the route. So I had to mitigate the risk of her barking furiously at them, including the baby in the stroller. And I realized, Craig, that, you know what, even though risk management isn't the sexiest thing in the world, risk mitigation is something we do every day in our personal and business lives. And sometimes we don't even think about it. I have to risk mitigate Bella. And so my question for you as we banter a little bit is, do you have a risk mitigation story, whether it's yours or somebody from an entrepreneur, you know?
Well, you know, as you're telling that story, I was thinking about this. So I've been an entrepreneur almost all my life, self-employed. My income has been, at times, it just disappears. Like it's highly variable. And I didn't realize that my wife had a risk mitigation strategy in place from just living overseas for so many years. She stores up meat in a freezer whenever we have a little bit extra cash. So she usually has, I don't know, a week or 2 of kind of emergency meat in case we ever, like, if something ever happened. And so one day I came home and said, hey, we just kind of hit a hard spot in the business. It's going to be a little while before I can pull any money out again. And we were eating steak for like the next week. And I didn't understand what was going on. I thought maybe we'd mix some signals on this. And I didn't know, but apparently she has just always been storing away for that day that she needs something.
I love it. During the pandemic, people were hoarding and stocking away toilet paper. Your wife stores meat. I like the meat better. I like the emergency steak better. You know, Kevin Campbell, welcome to the show. Investing in any form is risky business, and I've got to bet that you need to talk to your clients all the time about mitigating risks. Welcome to the show. Join us in this conversation.
Thanks for having me, guys. This has already been entertaining. Yeah, that's actually the funny thing is, yes, we do talk to our clients about risk mitigation and managing risk. But obviously, as you know, as we're here live streaming, we're in a very volatile environment in the markets. And what is really interesting is if you do miss risk mitigation properly up front, you don't get a lot of panicked phone calls during market volatility, which I think is very interesting. So I was doing another interview earlier today, and one of the things we were talking about was the fact that our phones aren't ringing off the wall with clients being concerned. I mean, we're getting calls from people who are not clients, but we're not getting calls from clients going, "Hey, what's going on?" And the reason being is because they know that we have risk mitigation strategies already in place, and they're doing their jobs during this time of volatility. So, but it is something that is very interesting during this period of time is that ever since 2009, it's been incredibly easy to make money in the markets, and many people do not recognize when we analyze risk for people, for new people who are coming into our process. We're often finding that they have no idea how much risk they're exposed to. And in many cases, it's far beyond the risk they're exposed to is far beyond what their comfort level is.
That is fascinating. How do you dig in and help someone figure out what their tolerance for risk is? And I'm thinking that on some level, if they don't even know what their risk level is, how do you surface that?
It's a great question. And we have some tools that we use for that are third-party software tools that were designed to help understand risk, which I very much, I would love to take credit for it and say it's our system and it's our tools, but there's actually a lot of power in it not being my system and not being my tools because it's third-party validation of the data set. So the first place we start off with is if you've ever dealt with, we've probably all run across this, where somebody will say, if you're talking to a financial advisor or you're picking out something in your 401k and they give you 5 options. Are you moderate conservative, or conservative, moderate conservative, moderate aggressive, or aggressive, right? Well, those are very subjective terms and they mean different things to different people. When we do a risk assessment with folks, we have them go through this. It's about a 5 to 7 minute process to help them understand risk of what their actual risk score is. And what we're able to do is say for example, you had a $250,000 portfolio. We can actually start asking you questions about, in that portfolio, how would you feel about X and Y, and start giving you parameters, real life examples of upsides and downsides, and help you figure out where your threshold for pain is. And that allows us, we don't measure risk on a 5-point scale. We measure it on a 99-point scale, 1 to 99. 1 is extraordinarily safe. That's like, sticking money in the coffee can and burying it in the backyard, which may not be safe near Bella. And a 99 is extremely high risk. So we're able to quantify that risk and help people understand what risk looks like in their portfolio. And again, since 2009, that for a lot of people, that hasn't been a big deal, but all of a sudden it is. Many people have forgotten the pain.
So there's got to be a psychology of this too. Part of it is risk tolerance, but I think another part, which may overlap a little bit, but not always, is just how people are wired. I have a friend especially that will say, boy, the market did this today. And and it's like, I don't even look, I just don't look because I drive me crazy. And I have to believe that, I'm aware, but I'm not counting every day. I got to believe that, part of it might be, how long you think you're going to live and when you need it. But I also have to think there's a whole psychology about it. Do you run into that in talking with clients?
Yeah, absolutely. I mean, it's a very emotional topic, and you're right. There are people who watch the market all day, every day, like me. I mean, I have a virtual background up right now because if you could see what's going on behind me, it's very distracting. That's because there's screens behind me that are that are running market tickers and all that kind of stuff behind me. And so we watch the market all day, every day. It's my job. It's what we do.
Right.
So we do it. We do that so our clients don't have to. But there are folks who have that psychology or that thought process that they need to watch it all day. And you're right. The part of it is, what's your time horizon? If you're 35, then this is nothing to you. What's going on right now is no big deal. As a matter of fact, it's probably substantial opportunity. But if you're 60 and planning on retiring next month, or 65 and planning on retiring next month, or 55 and planning on retiring next month, it's a different series. It's a whole different issue. But you mentioned something else a minute ago about lifespan, right? Well, how long are you going to live? Well, we talk about this a lot with clients is we're very process oriented. Matter of fact, you'll see behind me on the screen there, the SAIL formula. The SAIL formula is our process which we use. That's our proprietary process that we use to help clients navigate life, their financial life. But when we're talking, I have to talk about is nobody knows when their ticket's going to get punched. Right. Right now, sitting all over the country are people all over the world that are in their 90s or 100s that never expected to live this long. Matter of fact, my grandmother, not my mother, my grandmother is downstairs right now, and she's living with us. We are her current assisted living facility, so she lives with us. And if you go back to her lifespan, when she was born, life expectancy was in the 60s, right? If you were in your 60s, you were old. And now here she is in her mid 90s and has lived longer, far longer than she ever thought she would. The other side of that, a whole bunch of people died yesterday that weren't planning on it. And I don't mean anything about a pandemic or any one certain event from yesterday. That's just any average Tuesday. A whole bunch of people died yesterday that weren't planning on it. So you need to be prepared for both ends of that spectrum. What if I don't make it to 95 or 85 or whatever? And what if I do? Right. And those are two different, there's planning that goes along with all of that. And you need to have a combined strategy for how am I going to deal with all these aspects?
That is fascinating. So you were talking about like different people at different ages, like 35 and 65. What do you do if you find someone that maybe has a real mismatch in terms of their own personal risk tolerance? I could see a lot of 35-year-olds potentially, with just everything they've been raised with, having extremely low risk tolerance right now. And maybe some really brave 65, 70-year-olds just, they want to bet it all. And from your standpoint, how much are you just responding to whatever their risk number is, and how much are you trying to like influence that sense of risk or educate around that sense of risk?
You said the term right there, educate. I was just about to mention that one of our primary roles, we were just having this conversation internally, is that our primary role, somebody's asking the other day, well, what do you view your primary role and responsibility in your profession? And my primary, and people would think that I would say investment management or something like that. It's not. That's obviously a part of it. That's a huge part of it. But I'm an educator. The first and foremost, I'm an educator, and I have to help people understand that they may need to take more risk than they're really comfortable with, or they may not need to take as much risk as they're capable of. For example, if we run the projections and we can go, hey, you don't have to take that much risk. You have all of your needs can be taken care of without taking that much risk. So it's a matter of helping people dial in and help them understand. And you're right, there are 35-year-olds out there who don't have the risk tolerance that they should. And the cool thing is we have ways to help them understand the risk, and there's a lot of very unique risk mitigation strategies. The investments, many of the investment strategies that we use, the vast majority of the investment strategies we use, have a pretty heavy layer of defense on them. So, for example, if I mentioned that 99-point scale a minute ago, 1 to 99, some of my favorite tools are actually in the mid 40s on the risk scale. So they're actually below the halfway mark on the risk scale. However, they perform um, like they're on the high side of the risk scale. So that's that's a sweet spot, and it's an interesting thing is we can often, when we are using these risk mitigation or risk analysis tools, we can often find, it's very common for us to find that we can help somebody reduce their potential risk exposure and at the same time increase their potential annualized rate of return, which people go, God, that sounds awesome. And I'm like, but at the same time, it's kind of like, isn't that what we expect the financial services industry to be doing? Right? Isn't that the reason that you use a professional? But that's not what's going on in a lot of these cases. Out there in a lot of these portfolios, is it's buy and hold. It's create the portfolio and then revisit it once a year or once every couple of years. So we use some different strategies that have a lot of risk mitigation on them. So we're often able to take that 35-year-old and put them in a portfolio that is within their risk tolerance or very close to it. Because you don't want to take more risk than you need. I'll give you an analogy here. So if you have, let's say we had 2 race cars, right? We're going to take Dan out to the racetrack. We're going to stick Dan in a Formula One car, all right? Now, we've got 2 cars Dan can pick from. They both have the same acceleration. They have the same top speed. They have the same handling characteristics. So they're not going, one is not going to be faster than the other one. But one of them has 1950s safety technology in it, which means we're going to put a leather helmet on Dan and give him a lap belt, right? And maybe a leather jacket or something like that. And the other car has all the latest technology, right? It's got airbags, it's got halon systems, it's got a roll cage, it has harnesses and fire suits and everything. So given that, considering they both have the same top speed, Dan, which car are you getting into?
Knowing me, I'm probably going to get into the one that will save me, the non-leather, the non-leather hat one.
Right, of course. I mean, absolutely. Because if your performance isn't going to be higher, if it has the same handling characteristics, it has the same possible top end, why would you expose yourself to more risk? Because at some point, if you're racing a Formula One car, or if you're investing in the markets, at some point, there's likely to be some bad thing happen, right? Like right now, market volatility, right? In the market world, it's market volatility. In the Formula One world, it could be hitting a wall, right? So we know at some point you're going to spin out or something like that. Why take more risk than you need to? So I don't know if hopefully that analogy makes sense. That
does help. And just, we kind of hit a wall now. We got to go to break. We got to take our first commercial break. So I'm going to slam us into the wall just for a second, but we'll be back. Don't worry. So we're going to take that short break to hear from today's Spotlight sponsor. And when we come back with our guest, Kevin Campbell, for our Hot or Not section of the show, we're going to ask him about do-it-yourself investing. Don't walk away. We'll be right back with more of the Shrimp Tank.
Washington's most influential business network, EO Seattle, is run by entrepreneurs for entrepreneurs. We are part of the global EO organization of 14,000 plus entrepreneurs. A unique experience-based network, EO Seattle holistically supports the needs of entrepreneurs through business, family, community, and personal growth experiences. Learn from the experiences of EO Seattle business leaders who have been where you are. Imagine how much more you can achieve with shared experiences, community, and coaching with entrepreneurs who have already reached 1 million and growing. For more information, go to eoaseattle.org or email Craig at craigswanson.org.
All right. Welcome back to the Shrimp Tank, where we interview the best and brightest CEOs and business thought leaders in the greater Puget Sound area. I'm Craig Swanson, and our guest today is Kevin Campbell. For our next segment, it's Hot or Not.
All right, Kevin, we're gonna pepper you. Craig and I are gonna pepper you with questions about business, about life, about investing, maybe sailing, maybe golf. Who knows? You're gonna tell us whether our topic is hot or not, and why or why not. And at the end, you do win absolutely nothing. So we hope you enjoy yourself anyway. Hot or not? Just jump right into this. Hot or not, Kevin? DIY, do-it-yourself investing, whether it's E-Trade or Schwab or whatever, whoever else has their do-it-yourself platforms. What do you think of do-it-yourself trading?
I think some of it can be very good. There's never a situation where all tools fit all people, right? So, and for some cases, I think some of the do-it-yourself stuff is just fine. As your situation becomes more complex, that's when things probably need to move away from the do-it-yourself concept to a professional. There are a lot of things in life that all of us can do, and we may choose not to. Can I change my own oil? Yes. Do I do it? No. Can I mow my own lawn? Yes. Do I? No. I don't even own a lawnmower. So there are times when it's easier, cheaper, and often better to get a professional to handle it for you. But in the early days, when you're starting to invest, and I think it's fine to use some of those low cost platforms to start investing and start getting a start at it. But as you get more and more complex further on in life, more assets, more income, more things need to be taken care of. That's when it makes sense to certainly bring in a professional.
All right. I got one for you. Hot or not? Which is hotter, ambition or knowledge?
Ooh, that's a tough one. That's a tough one because they're so related. Knowledge without ambition or application is great, but it's not effective. Blind ambition without knowledge is also they're two sides of the same coin from that standpoint. You need a little bit of knowledge and a little bit of ambition.
Kevin, here, this is hot or not.
I am.
You're waffling a little bit.
I am. I'm going to have to go. If I had to pick one, I would say ambition.
And
because you can develop.
It's risk mitigation.
Yeah, right.
Yeah, sitting on the fence.
And the reason I would say that, the reason I would say ambition is if you have ambition, you can pick up the knowledge along the way.
There you go.
But if you have knowledge with no ambition, you're still not going to get to the end goal.
Yeah.
Well, I've got some ambition for our next hot or not. So hot or not, Kevin, with rising interest rates, it's now time to invest.
Well, I don't know if it's interest rates so much as it is market correction, right? So for right now, if you're retired, if you've just retired or you're about to retire, the market correction is kind of scary. But what is it they say about market conditions? Is it buy high, sell low? No, it's the other way around, right? So right now is certainly a good time for long-term investors. Right now is certainly an opportunity to buy things on sale because things are on sale. So I'm going to go with hot on investing.
All right. How about in times of well, I guess hot or not, action, taking action when we are in risk?
Oh, I think that's absolutely hot. For sure. If you, for those of us who use risk mitigation strategies in our investment, we're certainly being active during this period of time. And for people who are not, it is definitely time to think about taking action, about shifting strategies. Again, the strategies that have worked since 2009, which is basically just dump money into the market and you'll do fine. That is changing. And keep in mind, this stretch that we went through from 2009 through the end of 2021, longest, highest bull market in history, right? This is not normal. But for a lot of people right now, especially think about a lot of your 40 and 50-year-olds, and especially younger than that, a lot of today's investors, take anybody younger than the boomers. The boomers are who lost the most in 2000 and during the recession. That was who lost the most. Everybody younger than that, they don't really remember that pain, because even if they were investing, they didn't really have enough invested at that point that it was that significant numbers, right? It might have been a significant percentage, but not from a number standpoint, and they've recovered it and they've done well. So the strategies that have worked since 2009 through now are not the strategies that are going to continue working in the future. So action, hot.
All right. I have a fun one here. Hot or not, Kevin, wearing a kilt in public.
I was wondering if that was going to come up. Okay. Well, I'm going to go with hot when I do it.
Yeah. So let me give everybody a little bit of a background. Kevin and I are in the Paulsbo Rotary together, where we live, and we had a great event that was actually co-chaired by Kevin. It was a road a bicycle, it's not a race, but a ride called the Viking Tour. And I showed up to MC it, which is my job. And when I showed up, there was Kevin clad in what looked like an Aussie hat and a kilt, which was not Aussie for sure. But luckily, we didn't see his legs at all. I think they were all covered up by the kilt. But I thought, since we had Kevin on, this would be a great time to out you as a kilt wearer in public.
Yeah, yep. Guilty as charged. Now, I will also say that in our area, in our town, which is a unique little town out here in Washington, it is not uncommon to see people walking around in kilts. It's not every day that you see it, but it's not that uncommon.
So I've only been here since 1993. I don't know that I can count on one hand, including yours. I've seen people in kilts. So I guess I got to get out.
You're not
more.
hanging out. You've got to get out more. You're not hanging out in the right places.
Oh, maybe.
But yes. So what I did, one of the reasons I did that though too, is because I knew a lot of people would be, as one of the organizers, I knew a lot of people would be going, "Hey, I need to talk to Kevin. Who's Kevin?" And it would make it real easy for everybody else that was helping work the event to go find the big dude in the kilt.
There you go.
Because there was only one of it. There was only one walking around wearing a kilt.
Didn't Seattle have a fairly significant kilt manufacturer? Maybe I'm wrong about that.
There are some kilt stores there, and I don't know if they're manufactured here in Seattle or not. But and one person was certainly pointed out that, well, kilts are Scottish and the Viking Tour is Viking, and so I had to go all Cliff Clavin on him and break out a little bit of history about the Vikings invading Scotland, and that there was certainly some crossover between the Vikings and the Scottish.
Well, see, I'm based in Ballard. We actually see a fairly healthy number of kilts around here, so maybe that explains.
Oh, there you go.
Ballard is a
right. See, Dan just doesn't get out much.
I guess I don't go to the right places.
That's it, Dan. Next time we go play golf, I'm gonna wear a kilt just for you.
Oh gosh, I can't wait to see that. Craig, I think you better save us from this lunacy. I bet you have another hot or not.
Well, let's see here. So how about hot or not? Working with family.
Well, I have no choice but to say hot, because my wife is my business partner.
Oh, there you go. And she listening?
She's around here somewhere. Yeah. So, but yeah, absolutely. I think working with family can be challenging. But it's also, for us, it's been very rewarding. My wife and I, we've been, partners in life and in business for, coming up on 30 years. So we just celebrated our 23rd wedding anniversary, but we've been together. It'll be 30 years in November. And
so Kevin, I'm curious, not to interrupt. I'm curious. That's an interesting point. Barb and I work together, but we have different roles within. How are your roles split up, or are they split up in what you do at Peaks Financial?
There is so Chris or Christine, my wife, is also an advisor. So we're both advisors, and but we both work. Sometimes we work with clients together in a team fashion. Sometimes we separate. It just depends on the circumstances and whose skill set. She has certain things that she specializes in. I have certain things I specialize in. So just as you would in any office, where even if you have people that are in the same roles, they might have different subspecialties. And when it makes sense, we bring each other in on those. I handle more of the business operations side as well. I've been an entrepreneur since I was 23. I think I was 23 when I started my first business. So most of the operational side, not all of, but most of the operational side, as far as the actual running of the business, I handle. But as far as from our client experience side, working with clients and all that, we're peers in every sense of the word there. She is just as capable as I am, and we work well in that. It is great. We've always done a very, very, in business and in marriage, we've always typically followed the divide and conquer strategy, where we will often, she'll handle certain things, I'll handle certain things. and it makes for us, it's been a really good fit.
Well, that's a great segue because I handle certain things like taking us to break, and then Barb, who is our intrepid producer, and my wife handle certain things like telling you who our sponsors are. So that's what we're going to do right now. We're going to take a short break to hear from our sponsors. And when we come back with Kevin Campbell for our Plead the Fifth section of the show, we're going to find out where Kevin might be able to improve his game a little bit. Don't walk away. We'll be right back with more of the Shrimp Tank.
Plead the Fifth is brought to you by our corporate sponsors: Ideal Life 360, Cornerstone Financial, First Underwriters Insurance, the Kitsap Sun newspaper, BC Fitness Studio, and the Upstart Group. Please visit our website at www.shrimptankpodcast.com/Seattle to learn more about these terrific companies. Now back to the show.
All right, welcome back to the Shrimp Tank, where we interview the best and brightest business thought leaders in the Puget Sound area. I'm Craig Swanson, and our guest today is Kevin Campbell. For our next segment, it is Plead the Fifth.
All right, Kevin, we're going to turn up the heat a little bit on you. Craig and I are still going to pepper you with some questions. We might ask some hard ones, though, so you get to plead the fifth, but only once, so be careful. So you mentioned your lovely wife and business partner, Chris.
I plead the fifth.
Yeah, no, okay. Well, then you don't want to know what the next question is, so we'll find out. And who's also a recent new member of our Rotary Club as well.
Mm-hmm.
If Chris were sitting next to you, and for all I know she is, but if Chris were sitting next to you and we asked her, what is the one area in business or in life that Kevin could improve on, what would she say?
I'm going to guess that she would say it's in making sure that I am, as much as I talk about being a teacher and an educator with our clients, I often assume that she knows what's going on in my head. So I would assume it would be something along the lines of sharing more information with her. That is where I can improve the most, at least as it relates to her. Okay. Because we joke about this all the time, that sometimes we forget to engage each other in the conversation that's already going on in our head. So that would probably be it.
Okay. So you didn't have to plead the fifth right off the bat.
No. I'm walking a tightrope here, though.
That's good. Well, let's turn around to your kids. So you're an educator. You educate people on investing. Do your kids, your children, take your advice on investing?
They do. So my daughter currently doesn't have an investment account because her money and our money go to her university. So she doesn't currently have an investment account, but she has actually been pestering me to start one. Our son does. He's 17. He has an investment account that he and I manage together. So that I'm teaching him and showing him how to analyze things and how to invest and just the power. He's one of those kids who doesn't spend much money, and so he saves, like, every time he gets a gift, it just goes right into his investment account. But we're teaching him, and it was kind of funny. He came to me one day and he's like, got this like stack of gift cards. He's like, "Dad, what should I do with these?" I'm like, "You've never spent any of those?" And he's like, "No, I don't." And he just doesn't spend money. And I'm like, "Okay, well, I'll buy the gift cards from you, and then we'll take that money and invest it." So yeah, and it's something we look at every couple of weeks. We look at it together. I watch it, of course, like I do all of our investments. I'm watching them on a daily basis. But as far as meeting with him over it, we meet every couple of weeks and kind of discuss it.
Okay, I've got a follow up to that, and then I have another plead the fifth. So Craig, I'm just warning you. My first one is, what was the best gift card that you bought from them? Which was, out of those gift cards you got, what was the best one?
Gosh, probably, I think there was a Best Buy card in there, which I went and spent on geeky electronics. So I'm a bit of my life before finance was in technical IT. I was in IT engineering. So I've always been a bit of a techno geek. So I believe I spent it on some the Best Buy card on on some new tech toys.
Got it. Got it. So we see, for those of you who are listening, you can't see this, of course, but Peaks Financial has a logo behind them on the sail formula. And I know for a fact that Kevin is an avid sailor or an avid boater. So my question is, plead the fifth. Share with us the time when you were the most afraid, the most fearful while out on a boat.
I know exactly when it was. I'm trying to think about how to phrase this without making anybody feel bad. So we were out. We were out on the Puget Sound, and it was a sailboat race, and we were out on the Puget Sound, and it was the first time this crew had raced together, and crew communication and crew experience together is critical in a race. Sailing can be one of two things: either really boring when the wind is blowing, or it's not blowing. It can be really slow and boring, or it can be incredibly dangerous in the right conditions. And this day was incredibly dangerous due to the weather conditions, and a new crew together on a new boat, and things did not go well. And I literally, and by the way, we had also just recently moved to the Puget Sound area. And I literally, and my wife was on the race boat with me, so we were both on the same boat. And literally during this race, I am literally thinking, going the mental checklist of, okay, our insurance, I know our insurance premiums have been paid. I'm literally going through like life insurance checklists and stuff like that in my head as we're going through this. And okay, what's going to happen and all that. I mean, yeah, I was like, we're going to die. And that wasn't out in open ocean. That was right here in the Puget Sound. Yeah, it is. It's a lot of fun, but it can be an extreme sport.
Well, I feel like I'm pivoting away from boating since I don't know the boating side as much. But from a prediction or forecasting standpoint, what are you advising clients to do about COVID, as we are like emerging out of the COVID area, hopefully?
You know, COVID, from our standpoint, COVID hasn't had that, as far as strategy, it hasn't had that much of an impact. Obviously, it's had a massive impact to everybody in so many different ways, from personal, financial. Some people have done really well in the pandemic. Some people have suffered greatly in the pandemic, both from a financial and personal standpoint. So from our standpoint, our strategies have not really significantly changed. There have been people who we've had to adjust their plans because of circumstances changing. Life has changed. We lost a few clients during the pandemic. And when I mean lost, I don't mean like they're no longer clients. I mean they are no longer. We had clients who passed away during the pandemic. And for those families, we had to help them adjust the set of sails. So life is full of surprises. And the one thing that is constant in financial planning is that your life will evolve and your needs will change, right? So the plan that you put into place 2 years ago, 3 years ago is probably not the same plan that you need today. Now, it doesn't mean that planning isn't valid. It's that you need to create a plan, and then you need to adjust the plan. That's one of the things that we focus on in our process. As we mentioned, it's there on the screen behind me, the SAIL formula. Is the idea is to create a framework with which then you can operate your financial life, but that you can make adjustments as need be, because things are always going to change. That is the one thing that you can always count on. Death, taxes, and things are going to change, right?
So kind of speaking of that, one of the questions we're asking all our guests is what is your mental and maybe even physical response to the word impossible?
I think there's very few things that are impossible. Yeah, there's certainly some things that are impossible. Can I clap my hands and suddenly be in Florida? No. I mean, there's certain things that are certainly impossible. But, we as entrepreneurs, we hear that all the time. That's not possible. That's impossible, right? And we've probably all heard that. Throughout our lives as entrepreneurs, you've heard that that's not possible, or it's not, it's not likely. It's either impossible or it's highly unlikely, or whatever the circumstances are. I'm a firm believer of almost all innovation comes from somebody who was told by somebody else that that's impossible,
Absolutely. So Kevin, thank you so much for being a guest here on the Shrimp Tank. We've got to close up here. We're at the end of our day, but for listeners who want to get in touch with you or learn more about your company or how they can work with you to assess their own risk levels, where can they get more information?
So one of the easiest ways to contact us is on our website, peaksfinancial.com, and there's contact information there. There's also a schedule button where you can schedule a no obligation assessment. The first thing is to have a conversation, right? We are not all things to all people. We're all things to some people. We're not a fit for everybody, and everybody's not a fit for us. And the first thing to do, though, is have a conversation and see if there's room for us to help. And if there is, we can chat about that.
That's fantastic. All right. Well, I am looking forward to hearing more as people connect. And make sure for all of you that are listening that you can check out the replays at shrimptankpodcast.com/Seattle. And listen in whatever your podcast player of choice is. iHeartRadio, Apple, Google, whatever. Please follow us on your show's social media pages and YouTube, Facebook, and Instagram, and like us and follow.
Well, Kevin, thank you for joining us today. We had a great time visiting and talking, and really appreciate you hopping on. Craig, as always, great to see you. We'll look forward to seeing you next month. Everybody, do what Craig said. Go like us on Facebook. We live stream there every week, every Wednesday at noon Pacific. Our next show will be on Wednesday, June the 8th. My co-host will be Linda Popke. In the meantime, everyone, please be safe, be well, and be prosperous. Because until next week, the shrimp is back in the tank. So long.
I've been feeling like a shark in a shrimp tank. Big fish, small pond, and the